In today's show, Bitcoin circles $20,000 pre-CPI amid warning that the Fed risks blowing up the economy. In today's show, I'll be breaking down the latest technical analysis. And as pointed out here, new inflation record high on the year. At least that's what I'm now forecasting for June CPI. I forecast 8.8% year over year, breaking the previous 41-year record of 8.6% set last month. Month over month, this would be 1.2%. And BitBoy agrees, CPI coming out at 8.8% today. Watch, I've got a strong feeling this is the number. And quoting crypto analyst Mikhail Bende-Pop, area to hold for Bitcoin, 19,500. Otherwise, we'll be cascading south some more. The resistance at 19,800 is an important one. Cracking that, and we could be shooting off. All depends on CPI. Also be sharing the latest updates from Plan B and the stock to flow model. And this just in breaking news, South African Central Bank wants to bring Bitcoin and crypto into the mainstream, says their deputy governor. Also in today's show, Bitcoin to make new all-time highs within 24 months, says the CoinShares CSO. And quoting her here on Squawk Box, for us at CoinShares, the view is we are going to stay where we are for a while. There is no near-term upside catalyst. We have yet to see Bitcoin in a recession, she says. Certainly expect more pain ahead for tech stocks growth and also crypto. Also in today's show, I'll be sharing 3 key metrics which suggest Bitcoin and the wider crypto market have further to fall, as well as banks representing over $2 trillion in assets are now offering Bitcoin and crypto exposure to their clients. Quoting Bitwise here, more recently, a really fascinating development. Just in the last, 9 months, there are 7 private banks and broker dealers that have put our products on their platforms for their advisors and clients to be able to get access to this space. They represent $2 trillion in assets and tens of thousands of advisors and millions of accounts. Also in today's show, majority of Wall Street investors expect the Bitcoin price to plunge to this new low. That's right, a new Bloomberg survey says it asked 950 Wall Street investors whether they expected Bitcoin to first recapture the $30,000 level or fall to $10,000. And 60% of them said they agreed with the bearish scenario. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. The goal is to get to 100,000 subs. If you like getting that crypto, be sure to smash that subscribe button and ring that bell to turn on all notifications and help support us with the YouTube algorithm. Also be sure to check out Crypto News Alert Shorts. I release a new Shorts video every day here on the YouTube channel. And today's episode is brought to you by iTrust Capital, the #1 crypto IRA platform in America, for you to buy and sell crypto in real time 24/7 in your retirement account. They have over $5.5 billion in transactions and over 175,000 plus accounts created with over 2,000 plus 5-star reviews. So when it comes to trading crypto tax-free, look no further than iTrust. And if you get started today, be sure to use my referral link in the description right down below to claim up to $100 in free Bitcoin. And let's get this crypto tax-free. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, crypto fam? Make some noise in the live chat. The Bitcoin rebounded from overnight lows on July 13th as the crypto markets nervously awaited for the United States inflation data. And right here, you're looking at the Bitcoin 1-hour candle chart. Data from Cointelegraph Markets Pro and TradingView showed Bitcoin climbing from 19,250 to 19,900 at the time of this recording, up 3.3% on the day. And with 3 hours to go until the release of the CPI data for June, crypto market showed little sign of advanced volatility. Now, previously, the U.S. government had warned that the CPI figures were expected to be highly elevated, with unofficial projections from other sources, as pointed out here by the Happy Hawaiian, new inflation record high on the year. At least that's what I'm now forecasting for June CPI. I forecast 8.8% year over year, breaking the previous 41-year record of 8.6% set last month. And month over month, this would be 1.2%. And he continues, the crazy thing is this would mean in the first 6 months of the year, CPI inflation will have a run at a monster 12.5% annualized rate. Or in other words, if the second half of 2022 looks like the first half for inflation, we would finish the year with headline CPI at 12.5%. And BitBoy chimed in, CPI coming out at 8.8% today. Watch, I've got a strong feeling this is the number. Let me know if you agree or disagree with the crypto analyst. Now biding its time, meanwhile, was the US dollar currency index, which lingered at just above 108 after a corrective move from fresh 20-year highs, as you can see here in this chart, and analyzing the potential for the Federal Reserve to continue interest rate hikes to tame inflation. Meanwhile, one analyst argued that there was already little, if any, room for maneuver. As shared here, I am overdue on updating the Fed pivot indicator, and frankly, it's showing we have arrived already. We're at the point where the Fed would usually halt rate hikes and begin easing again as they gear up for 75 BP in a couple of weeks. They would be knowingly blowing up the system. Now let's check out this Fed pivot indicator chart, which you can see here, which shows the Fed rate direction change over the past 33 years and suggests that hikes had already hit their maximum allowed levels. Meanwhile, the altcoins were somewhat predictable and lockstep with Bitcoin ahead of the inflation numbers. Ethereum, after losing 8% the day prior, circled at $1,075 at the time of this recording, but still down 6.3% over the past 7 days, which you can see in this chart. And other tokens in the top 10 crypto by market cap were static on the daily timeframes. And for Cointelegraph contributor Mikhail Van de Popp, however, there was still a reason to believe that the selling pressure was circumstantial rather than a longer-term trend. As he shares here, yes, the market should have been correcting, but right now the valuations of crypto and Bitcoin are way lower than what they should be due to the forced selling from Three Arrows Capital, Luna, and more. That's why a break through $22,000 is going to accelerate the price to $30,000 as well. And I like to point out that the 200-week moving average is currently sitting at $22,500. And he also updated us here this morning. Area to hold for Bitcoin, 19,500. Otherwise, we'll be cascading south some more. The resistance at 19,800 is an important one. Cracking that, and we could be shooting off. All depends on CPI. And Plan B updated us here. So how is the stock to flow model doing? Large deviation with Bitcoin price, just like 2013 and 2017, but now on the downside. Note that all the indicators are currently at extreme values, the 200-week moving average, the RSI, realized price, etc., waiting for the bounce. And someone responded, help me understand something. Big deviation to the upside. Yeah, stock to flow is the best model ever. Big deviation to the downside. Stock to flow is broken. And Plan B is a scammer, just trying to learn how to interpret the model. Plan B responded, I do not understand that either, but I get used to it. In fact, when I published stock to flow model in 2019, Bitcoin price was below $4,000 and everybody was calling for sub $1,000 Bitcoin, and most thought I was crazy, calling for $55,000. All well. And he also updates us here. Realized price is sort of the average cost price. Think of it like moving averages, but instead of equally weighting months, months are weighted by how many Bitcoin moved on chain that month. So 5-month realized is last 5-month prices weighted by Bitcoin moved in the last 5 months. Same for the 2-year and for all of Bitcoin. And this just in, breaking news, South African Central Bank wants to bring Bitcoin and crypto into the mainstream, says their deputy governor. Let's freaking go. And before I break down next story of the day, Bitcoin to make new all-time highs within 24 months, says the CoinShares CSO. But first, let's take a quick look at the overall crypto market. As you can see, Bitcoin, Ether, and all the major alts are now currently correcting. Back in the red, Bitcoin down 4%, trading just above $19,000. We have Ethereum down almost 5%, maintaining just above $1,000, while Binance Coin, Solana, Polkadot, Avalanche, XRP, and Cardano all correcting and in the red. But all right, now let's break down our next story of the day. Bitcoin may have further to fall, but CoinShares Chief Strategy Officer Meltem believes that the top crypto will reach new all-time highs within the next 2 years. She noted that Bitcoin has always been a cyclical asset, with drawdowns from peak to trough at 80 to 90%. Historically, when Bitcoin currently sitting at about 65% down from its all-time highs in November of 2021, she believes that there is still room for some downwards correction. However, she notes that there has been strong support around $20,000 and that she did not expect Bitcoin to fall below $14,000. She predicted the pain would be a distant memory by 2024, sharing the following: in the next 24 months, we will see new all-time highs in Bitcoin. Now, reversal may be some time off. However, she can see no near upside catalyst, which could be a signal of more pain in store for the weaker crypto projects. Quoting her here, we obviously had a lot of liquidations, a lot of insolvencies that had a massive impact on the market. We're talking about 10, 20, 30 billion of capital that has basically evaporated overnight. For us at CoinShares, the view is that we are going to stay where we are for a while. There are no near-term upside catalysts. We have yet to see Bitcoin in a recession, and certainly expect more more pain ahead for tech stocks growth and also cryptocurrency. And she says she expects a large number of crypto assets to be wiped out during the bear market, similar to what has been seen in tech stocks. As she shares here, there's a very, very long tail of crypto assets that I think will go to zero that doesn't really have any long-term prospect, as we've seen with so many tech stocks as well. And also Louis Schumann, managing director at broker comparison site Forex, suggests a similar view. In a recent 9 News report, he predicted that the current crypto downturn could kill as much as 90% of all crypto projects. Quoting him here, "This is a cleansing process," Schumann said, adding that only the strongest crypto projects will survive this bear market, but it also serves as a massive opportunity for many no-coiners to enter the crypto market for the first time. Fortune favors the brave in crypto right now, and last month, billionaire entrepreneur Mark Cuban says he doesn't expect the crypto bear market to be over until there is a better focus on applications with business-focused utility, and he also believes that mergers between different protocols and blockchains will eventually see the crypto industry consolidate, as that's what happens in every industry. Let me know if you agree or disagree with these predictions, that we're likely to see a new all-time high within the next 2 years for the king crypto, and that potentially 90% of the altcoins will die. And before I break down next story of the day, and I share with you the 3 key metrics which suggest Bitcoin and the wider crypto market have further to fall. But first, let's take a quick look at the overall crypto market cap, sitting just under $900 billion with about $55.5 billion in volume. In the past 24 hours, the current Bitcoin dominance is 42.8%, with the Ether dominance at 14.8%. And checking out the top 100 cryptocurrency gainers for the past 24 hours, we have Aave leading the pack, up 7.3%, trading at $72.19, followed by Serum, up 5.4%, trading at $1.05, followed by CVX, up 5%, trading at $5.55. And checking out the top 100 cryptocurrency gainers for the past week, you can see a sea of red, which is a handful in the green, including Quant, up about 30%. We have XCN up about 14%, and Aave up 12.2%. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're rated a 15 out of 100 in extreme fear. Yesterday 16, last week an 18, and last month an 11 in extreme fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That could be a great buying opportunity, just like we're witnessing right now. BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. But all right, now let's break down the next story of the day. The total crypto market capitalization has fluctuated in a 17% range in the 840 billion to 980 billion zone for the past 28 days. The price movement is relatively tight, considering the extreme uncertainties surrounding the recent market sell-off catalyst and the controversy surrounding Three Arrows Capital. From July 4th to the 11th, Bitcoin gained a modest 1.8%, while Ethereum price stood flat. And more importantly, the total crypto market cap is down 50% in just 3 months. That's right, literally down 50% in 90 days, which means that traders are giving higher odds of the descending triangle formation breaking below its $840 billion support. As pointed out here on crypto Twitter, Bitcoin bottom scenario. Since Bitcoin downtrend from its peak, Bitcoin has been farming the same descending triangle pattern every time, but each triangle is becoming smaller. We might see another breakdown from the triangle, and 400-week moving average can be bottom. Now, one of the 3 key metrics which suggests Bitcoin in the crypto market has further to fall is the Crypto Greed and Fear Index, which I previously shared with you. Now, for the next key metric, Asia-based flow and derivatives demand is neutral and balanced. That's right, the OKX Tether Premium measures the difference between China-based peer-to-peer trades and the official US dollar currency. Excessive crypto retail demand pressures the indicator above fair value at 100%. Now, a positive funding rate indicates that buyers demand more leverage. However, the opposite situation occurs when shorts require additional leverage, causing the funding rate to turn negative, and perpetual contracts reflected a neutral sentiment as Bitcoin, Ethereum, and Ripple displayed mixed funding rates. Some exchanges presented a slightly negative bearish funding rate, but it is far from punitive. The only exception was Polkadot's negative 0.35% weekly rate, but this is not especially concerning for most traders. That's nothing when it comes to volatility. So considering the lack of buying appetite from Asia-based retail markets and the absence of leverage futures demand, traders can conclude that the market is not comfortable betting that the $840 billion total market cap support level will hold. What are your thoughts? How low do you feel that market cap is likely to go? Or do you feel we'll likely get back above that $1 trillion milestone anytime soon? Let me know in the comments below. And before I break down next story of the day, banks representing over $2 trillion trillion in assets are now offering Bitcoin and crypto exposure to clients, as well as the majority of Wall Street investors expect Bitcoin to plunge to this new low, according to this latest survey by Bloomberg. But first, I want to remind you to smash that show more button right below this video in the description for detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. Also, some very helpful resources for you to plug into. Also, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And be sure to drop a comment. It helps out tremendously with the YouTube algorithm. And of course, you can find me on all the major podcasting platforms, from Spotify to Apple's iTunes and Google Play. And if you're listening to the pod, be sure to check out the YouTube channel at cryptonewsalerts.net for the full premium experience with video. And of course, you can follow me all across social media, from Twitter, Facebook, Instagram, Telegram, and TikTok. So wherever you're at, be sure to plug in and follow me there. But all right, now let's break down our next story of the day. One of the world's largest crypto index fund managers is offering some unique insight into the current state of crypto adoption. In a new interview with Real Vision, Bitwise Asset Management CEO Hunter Horsley breaks down the types of investors and trends that the firm is witnessing as Bitcoin price plows through a fresh bear market phase. And in addition to working with thousands of self-directed high net worth individuals, tens of thousands of public shareholders of its publicly traded products, about 1,000 independent advisory firms, and a few dozen institutions, Horsley says that private banks and broker-dealers are beginning to take the plunge into the digital asset market. Quoting him here, more recently, there has been a really fascinating development. Just in the last, 9 months, there are 7 private banks and broker-dealers that have put our products on their platforms for their advisors and clients to be able to get access to the space. The platforms that over the last 9 months or 12 months, it has been recent and ramping up, are approving our products to get crypto exposure. They represent $2 trillion in assets and tens of thousands of advisors and millions of accounts. And in addition, Horsley says that the number of institutional advisors working with the firm is increasing at a rapid pace. Quoting him again here, in 2020, 6% of advisors said that they are allocating client money to crypto. That grew 50% year over year in 2021 to 9%. Still small, meaningful because it's a giant audience, but small. This year, it's supposed to grow another 70% to 16% of advisors allocating. If you play that forward, you're at 50% of this segment having allocated by 2024, which FYI is the time of the next Bitcoin halving. So it still feels early because 9%, 16%, that doesn't feel like everyone I talk to, but the rate is what's important, and the rate is a wave that's gathering steam. Now, Bitwise launched its first crypto index fund in 2017. The firm now offers 14 crypto funds and exposure to over 30 different crypto assets and 10 NFT collections with $1.3 billion in assets under management. And to watch this entire interview with Bitwise CSO and Raul Pal entitled Surviving the Bear Market, check the show notes below the video in the description. But all right, now let's break down our final story of the day. A new study finds that many Wall Street investors believe that the king crypto hasn't bottomed out yet and will fall to nearly half of its current value. A new Bloomberg MLIV Pulse survey says it asked 950 Wall Street investors whether they expected Bitcoin to first recapture the $30,000 level or fall to $10,000, and 60% said they agreed with the bearish scenario. Now, the poll ran from July 5th to the 8th, during which time Bitcoin ranged from a low of 19,420 up to as high as 22,100. And at Bitcoin's current price at around 19,000, the leading crypto asset by market cap would have to drop by about 50% to be priced at $10,000. And conversely, Bitcoin would need to rally by about 51% to reach $30,000. But regarding the overall bearish sentiments, Bloomberg shared the following: the crypto industry has been rocked by troubled lenders, collapsed currencies, and an end to the easy money policies of the pandemic that fueled the speculative frenzy in financial markets. The survey group was also questioned about other aspects of the crypto space, with retail investors taking a more skeptical view compared to their industry counterparts. And amongst professionals, 26% believe that cryptocurrencies are the future, compared to 23% on the retail side, and 24% of retail respondents think digital assets are all garbage, versus just 18% of the pros having having such a bleak opinion. Now, despite the staggering tumble of the crypto markets, which have endured since achieving the all-time highs last November at $69,000 for Bitcoin, Bloomberg notes that those surveyed still believe Bitcoin and Ethereum could survive in the long term. Quoting them here, a majority of respondents anticipate that one of those two will remain a driving force in 5 years, even while a significant share sees central bank digital currencies taking on a key role. And while non-fungible tokens, better known as NFTs, surged into the mainstream in 2021, only 9% of the investors believe that this niche area of crypto is a viable investment opportunity. So there you have it. What are your thoughts surrounding these Wall Street investors predicting a $10,000 Bitcoin price more likely before we hit the $30,000 mark? Let me know your honest thoughts in the comments right down below. Now for the top 3 comments from yesterday's episode, Danica wrote, "I just recently found you and you have become the highlight of my day. Appreciate your clarity and accuracy. I always listen more than once because there is so much jam-packed info in the process. Thank you. Greatly appreciate your support, Danica. Super glad you found my channel. Much love and respect." Hodl. Our next featured comment comes from Steve M. "I agree with Arthur Hayes. $1 million Bitcoin should happen by 2030. Nice. $1 million Bitcoin price by 2030. Easy peasy, in my opinion. Send it." And the third and final comment comes from our very own Inner Dino. "Thanks, JV. Excellent show. Loved it, as I always do. See everyone next time. You're the best show. Keep stacking them sats. See you tomorrow. Hodl." And to be featured on tomorrow's episode, drop me a comment right down below.